What is going on, my good old friends of YouTube? It's Das here. Welcome back to another video. So I'm sure you guys saw at this point, Sofi reported earnings in the morning and the stock initially shot up to the mid-8s. We were at $8.47 to be exact. And then shortly after, we actually collapsed to $7, which is where we are now. We're down over 10% so far on the day. So we have to break down the earnings, the charts, what in the world is going on, why is the stock selling off, and we're going to break down what I'm looking to do with my position. As you guys know, I'm personally long. So if y'all find value, hit the like button, make sure to subscribe, and feel free to check out my Patreon if you guys want to see me build out my private portfolio, see all the charts that I post throughout the day, be a part of the Discord chat. All of that is on Patreon down below. You can check out the QR code right here or go to stassurfest.com/Patreon. And with that being said, cheers. Let's dive right into the video. So like I said, guys, we got earnings this morning out of Sofi and the stock shot up initially, but since that point, we've sold off and we've been consolidating all day today at $7 per share. If I zoom in, you guys can see exactly that. We hit $7 at about 9:40 a.m. on the East Coast, so 10 minutes after the markets open, and we've been consolidating at that point ever since. So the company reported 2 cents of GAAP EPS, which beat the 1 cent expected, which is great. And they also beat on sales, $580 million versus $555 million expected. And the real reason why the stock is selling off, just to get the cat out of the bag right away here, guys, is because of guidance, right? Their Q2 guidance for revenue was pretty weak. I believe it was around $555 to $560 million is what they're guiding, and the estimate was more like $580 to $590 million, so that is not the best sign. But what is a pretty good sign, if we look past Q2 guidance, we can see that the full year guidance for full year adjusted net revenue, we can see it's at $2.39 billion to $2.43 billion. That's what they're guiding the company versus the $2.37 billion expected. And the prior range, the implied prior range was $2.36 to $2.4 billion. So they beat EPS, second GAAP profitable quarter. They beat revenue. And if we look past the weak Q2 guidance, which will blow past in about a month or two, right? 3 months, whatever. If we look past that to the full year numbers, they're pretty good in terms of, guidance. We're still looking pretty strong, which is why I think this 10% sell-off is a bit too overblown. Sure, could I have seen it go down 4 to 5%, 3%? Would that be more reasonable? Yeah, but here we are, down 10% on those numbers, right? Again, mostly because of Q2 guidance. So before we dive deeper into the charts, let me actually come over here to the actual earnings release and break down some key numbers here that I'm seeing, right? So Anthony Noto, CEO of Sofi Technologies, Inc., commented our first quarter was an exceptionally strong start to 2024, demonstrating significant momentum as we responsibly grow revenue and diversify toward our financial services and tech platform segments, sustain profitability, reinforce our balance sheet, and grow our member base. We delivered adjusted net revenue of $581, like I said, million, representing 26% year-over-year growth. Financial services and tech platform segment revenue combined grew 54% and represented a record 42% of consolidated adjusted net revenue, offsetting flat lending segment revenue given a more conservative approach in light of macroeconomic uncertainty. And Noto also said we delivered adjusted EBITDA of $144 million, a 25% margin, representing 91% year-over-year growth, and this equates to a 57% incremental adjusted EBITDA margin, with all three segments profitable on a contribution basis. At the same time, we further strengthened our balance sheet, growing tangible book value by $608 million, ending the quarter at $4.1 billion and $3.92 of tangible book value per share, up 16% sequentially. And coming down here a little bit more, now you guys can see the total net revenue was $644 million. That's compared to $472 last year. That's 37% growth. But if we're looking at the adjusted net revenue, which is the number we just gave, $581 million versus $460 last year, that's up 26% year over year. And you guys can see the adjusted EBITDA growth year over year, tangible book value per common share. All of those are growing pretty nicely year over year. And let me show you this. Coming over to the presentation, if you will, whatever you want to call it. Yeah, I guess it is the presentation, right? We can see here that the total members are growing. We have 8.1 million members. That grew 44% from, it looks like, last year. Boom, that's really good. Last year they did, or they had rather, let me see, Q1 2023, 5.6 million members. So that grew to 8.1 million. So this is obviously heading in the right direction. Even quarter over quarter, they grew by 600,000 members, which is phenomenal, from 7.5 million to 8.1 million. I'm loving that, guys. And coming down here a little bit more, you guys can see products, new product additions of 989,000 for the quarter, it looks like. Yeah, that was for the quarter. That's 38% growth year over year, and that's growing pretty much every single quarter, right? And Galileo accounts in millions, they total 151 million, up 20% year over year. That grew pretty nicely quarter over quarter as well. So that's crushing it, loving it. And lending and financial services products, those also grew. On the left here, we have lending products. They grew 20% year over year to 1.7 million. And financial services products grew 42% to 10.1 million. So great year over year growth and quarter over quarter growth for that matter, guys. And coming down here a little bit more. Let's come down a little bit more. By the way, guys, hit the like button. Make sure to subscribe if you like this type of content and you want to see more updates on SoFi and other companies, as it is earnings season right now, guys. So make sure to subscribe. Hit that notification bell. We're trying to get the 50,000 subs this year. I appreciate you all for tuning in, as always. So this is the Q2 2024 non-GAAP guidance, which I touched upon a couple of minutes ago. You guys can see the low is $555 million and the high is $565 million. That's adjusted net revenue guidance, and that implies 14% growth on the low end and 16% growth on the high end. So that is why, again, the stock is falling. That's the big reason. Lower guidance than expected, slowing growth on revenue, which in my opinion, it's a short-term slowing of growth. It's not the end of the world. I don't think the stock should be down 10-12% like it is right now. And we can see here for full year 24 guidance, financial services net revenue growth of more than 75% versus 2023 levels, tech platform net revenue growth of 20% versus 2023 levels, lending adjusted net revenue at 92 to 95% of 2023 levels, GAAP net income of $165 to $175 million, and adjusted EBITDA of $590 to $600 million, with GAAP diluted EPS of 8 to 9 cents and $800 million to $1 billion of tangible book value growth, and total capital ratio over 16% at year end. And keep in mind, this guidance assumes expenses under the EBITDA line to remain flat when compared to 2023 results, a 50-50 revenue split between lending and the combined tech platform and financial services segments, as well as adjusted EBITDA margin of 25% for the full year for 2024. So keep in mind, these are just estimates. It's just guidance. Things are subject to change. But yeah, that's what we're looking at. And, the guidance looks like last year's guidance, the year before that. Obviously, the guidance for growth was a lot higher for annual growth. It's come down a good chunk, but I do expect that to reaccelerate at some point, right? So that's a quick breakdown here, guys, of these earnings. And of course, we can go deeper into the members, the products, lending products, financial services products, and see how those are doing year over year. But I don't want to bore you guys too much. One thing I guess worth mentioning is the fact that we are seeing a huge spike in, of course, personal loan originations year over year, as well as home loan originations, and for that matter, student loan originations as well. You guys can see, looks like this Q1, they did $751 million of Looks like student loan originations last year Q1 they did, let's see here guys, looks like 525 million. So that's growing nicely year over year, and of course the list goes on, guys. So yeah, guys, that's a quick breakdown here on their numbers, going a little bit over kind of what's going on here with SoFi. And like I said, guys, this stock has been consolidating all day at $7 per share, which you can see that right here for yourselves, and that's a pretty good sign considering a couple of months ago, you guys know this, and over the past couple of weeks, we've held $7. That's been a very strong support for this stock. I mean, look, guys, if I draw out $7, that's been the support for months. I mean, look, the last time, we tested $7 was about a month ago, or excuse me, a week ago, 2 weeks ago. All throughout pretty much March and April, we've held $7, and we held it in the middle of January, all throughout September, October, November, December, right? So this is a very critical spot for the bulls. And you know me, guys, I'm long SoFi. I did not sell. I'm not looking to sell anytime soon. I'm holding on, and I'm actually looking to buy some more this week after earnings. And in that low $7 range is where I'm looking personally to strike. So what do you guys think? Let me know your thoughts in the comments. Feel free to hit the like button, subscribe, and check out the Patreon if you guys want to see me build out my Patreon portfolio, which has been crushing it lately, guys, and you want more access to me throughout the day, the charts that I post, Discord access, exclusive content, all that stuff is on Patreon down below. Check out the QR code right here, or go to StasserFest.com/Patreon. And guys, of course, don't forget to get your 10 fractional shares of the Mag 7 stocks for Moomoo, which the clock is ticking, guys. Use that link down below. Check out the QR code right here, or go to StasserFest.com/Moomoo. And with that being said, cheers. I'll catch you guys later.